Stop! Do not buy an EV right now. A major EV market crash is upon us. Carmakers have just accidentally leaked a shocking EV market update showing the dark picture behind this EV scam. Consumers are abandoning EVs. With thousands of new electric vehicles piling up in dealer lots, nobody is running to buy them. By 2030, all automakers have committed to a whopping $616 billion in spending solely dedicated to EVs. And this year alone, nearly 1 million EVs were produced and shipped to dealer lots. But then, something unexpected happened which no one saw coming, leading to one of the biggest auto disasters to date. Come with me as I tell you all about the massive EV market crash that could send all EV makers down. Even if you don't own an EV, this crash could hurt you too. You thought you knew what's going on, but trust me, you have no idea. So here's what exactly happened. The whole EV market is about to crash, and the prices will go down by nearly 50%. If you're in the market for a new or used EV, this is not the time to buy one. Companies like Ford, GM, and Tesla have spent billions making EVs, but now nobody is buying them. In the United States, the sale rate for EVs has slowed, taking roughly twice as long to sell an EV now as it did in the previous November. While consumer sentiment still largely favors EVs as the future, replacing combustion engines, people still have their doubts due to the high prices and poor range on offer, especially at the entry-level variants. One might point to range anxiety and a lack of public charging infrastructure as significant barriers. The average consumer is hesitant to commit fully to EVs, particularly for long-distance travel, which requires careful planning around charging stations. But the real reason is darker than you think. It is China that is steering the American EV ship with a dangerous strategy that nobody is talking about, but more on that in a couple of minutes. The market reflects this sentiment, with EVs sitting in dealership lots for 90 to 100 days, quite a stark contrast to the 52-day average for internal combustion engine vehicles. In 2021, 86% of U.S. buyers considered an EV, and by 2023, that number dropped to 67%. The pricing of EVs is another hurdle. They tend to be costlier than their gasoline counterparts, which may explain why the luxury EV sector hasn't seen as much of a slowdown. The affluent consumer base is less affected by price hikes. Tesla, the trailblazer in the EV market, has not been immune to this downturn. Despite its position as the only U.S. car maker with a profitable EV business, Tesla has had to slash prices to sustain its sales volume, with cuts as steep as 30% this year. Tesla CEO Elon Musk raised the alarm last week in explaining why he was slowing plans for a Mexico factory. "I am worried about the high interest rate environment that we're in," he said on Tesla's earnings conference call, "as I just can't emphasize this enough that the vast majority of people buying a car is about the monthly payment. If interest rates remain high or if they go even higher, it's that much harder for people to buy the car." Collectively, companies have pledged approximately $100 billion in North America alone to produce electric cars aimed not only at luxury buyers, but also at the mass market. However, with the affordability of these vehicles being squeezed by economic conditions, achieving this target is becoming increasingly difficult. Ford's F-150 Lightning, for instance, has an entry price of around $50,000, which is significantly higher than its gasoline-powered counterpart at less than $37,000. General Motor Company's Chevy Blazer also sees a substantial price hike in its electric version, starting at $56,000 compared to the gasoline model's $37,000. The main contributor to the higher costs of EVs is the expensive batteries that power them. Bloomberg NEF research indicates that it may take at least another 3 years before the prices of EV batteries and internal combustion engines can align. Tesla's aggressive price cuts have led to a significant reduction in automotive revenue growth, from 51% last year to just 5% in the third quarter of this year. The company's automotive gross margin also saw a decline, falling to 16.3% in the quarter, which is the lowest it's been in over 4 years. Major automakers are putting expansion plans on hold as they navigate this challenging environment. Tesla CEO Elon Musk hinted at postponing a new $1 billion plant in Mexico. GM has delayed plans to expand its electric pickup truck production in suburban Detroit, pushing the start date to late 2025 from the initially planned next year. Ford Motor Company is also scaling back, delaying $12 billion of its $15 billion planned EV-related investments. These strategic pullbacks are reflected in the financials. Ford's electric vehicle unit, known as Model E, reported an operating loss of $1.3 billion in the last quarter and expects a loss of $4.5 billion on EVs this year. For now, they are selling EVs at a loss of nearly $36,000 per vehicle. For Ford, this is manifested in a notable decrease in sales for its Mustang Mach-E, which saw a 53% drop month over month in October 2023. Despite the Mach-E previously boosting Ford's sales records, the company is now reducing production of the vehicle. The Mustang Mach-E's sales plummeted to 2,732 units from a high of 5,872 units in September. Ford's overall EV sales have increased by 12.6% through October, outpacing the growth of ICE vehicles at 6.8%. However, these figures fell short when compared to hybrid vehicle sales, which saw an 18.8% increase. In response to the shifting market dynamics, Ford introduced a new flash trim for the 2024 F-150 Lightning, offering a range of 320 miles and a tech-loaded interior for under $70,000. But again, that high sticker price is the main reason for Ford's downfall. Their decision to stop F-150 Lightning production shook everyone, especially because their plant in Kuataitlan had been retooled to boost output, which it did until recently. The EV had accounted for over 70% of Ford's total EV sales in a record-setting third quarter. In conjunction with the production cut, Ford is also delaying significant EV-related investments. A second battery plant in Kentucky, in partnership with SK On, is being postponed, contributing to an overall delay of around $12 billion in EV spending. GM is facing similar challenges, recently announcing delays in the production of its Equinox, Silverado RST, and GMC Sierra Denali EVs. The Orion assembly plant in suburban Detroit will now commence production of the electric vehicles of the Chevy Silverado and GMC Sierra by the end of 2025, a year later than initially planned. In a statement addressing the delay, GM cited the need to manage capital spending and align with the evolving demands for EVs. Mercedes-Benz executives have also expressed concerns over the EV market's future. In recent statements, top executives from all three companies have highlighted the challenges faced in the EV sector. Ford CEO Jim Farley, during the company's third quarter earnings call, emphasized the difficulties in the EV market, stating, "It's been a challenging situation for sure. People are not ready to pay what we thought they would." Farley pointed out the stark reality that a great product is no longer enough and that competitive costs are now critical. He also highlighted the issue of affordability for consumers when it comes to EVs. In September 2023, the average transaction price for a vehicle in the US was around $48,000, while an EV would set buyers back between $53,000 and $60,000. But did you know the dark reason behind why American automakers aren't able to sell EVs? The thing is, nearly 80% of EV battery supply is controlled by China. And while America is trying to become self-sustainable in this regard, China simply won't have this. They first caused the global semiconductor shortage in 2021, which led to massive shortages amidst heavy demand. This led everyone into thinking that EVs are the best things they could purchase, prompting car makers to invest billions into Chinese EV supplies. But later on, when the cars finally hit the market, it was then when people realized how bad the situation was. Now, nobody is buying. Brands have started to drop prices like crazy. Bloomberg NEF reports a 13% drop in the average price of a battery electric vehicle in 2023, bringing it down to approximately $33,300. This is fueled by the decreasing cost of batteries, which is projected to reach a tipping point for mass EV adoption by 2023. This buyer's market situation has prompted analysts to advise against immediate car purchases, suggesting that prices are likely to fall further in the coming months. This is a seismic shift from the recent past, where consumers paid premiums and faced long waits for new vehicles, especially EVs. But now, with the upcoming crash, it would be best if you could at least wait till the second quarter of 2024 to buy an EV. The road ahead for EV manufacturers is fraught with challenges. The need to balance affordability with profitability is paramount. As automakers adjust their strategies to the changing market conditions, the evolution of the EV industry will likely be shaped by economic factors as much as by technological innovations. One thing is for sure, buying these overpriced EVs currently is definitely not a wise decision. Instead, one can save tens of thousands of dollars if they stick to hybrids or pure ICE vehicles and save themselves from the EV market crash. Do you think EVs will become affordable anytime soon? Let me know down in the comments below. I just uploaded a video about groundbreaking news that could hurt the entire EV industry. Do check it out if you want to be truly shocked by what's about to happen with EVs.